Disclaimer: Forex trading carries risk and may not be suitable for everyone. Only trade with money you can afford to lose. Ladies and gentlemen, welcome to another video. So I can say set and forget strategy is one of the best strategies out there. So from last year, I've witnessed how good this strategy is, and when it comes to like psychology, it even makes it easier for me to not panic. And I've learned that when you are holding a position, you don't have to keep on checking it unless there are like economic events. And last year I learned that if the market goes into profit and then goes back into drawdown again, do not close your trades manually, and you should let your stop loss hit or take profit hit. Because I remember there was a trade on GBP/USD last year where it was in profits, and then the other day it went back into my entries and a little bit of drawdown, and then I closed. And little did I know that the market will drop again. Without hitting my stop loss, it dropped again and smashed my TP. And that's when I learned that the set and forget, you should allow it to do its thing. So today we're going into it, A to Z, everything you need to know about the set and forget, starting with the watch list. So the watch list, as you can see, there are multiple pairs. So in total there are 24 pairs. So I have excluded some pairs, but if you'd like to know where I got this watch list, so basically, like when I watch FXALEXG videos, what I saw is that these are the watch list he uses mostly. So I took screenshots from his videos and I copied all the pairs that he trades, or the pairs that he put on his watch list. So you can see over here from AUD CAD to GBP/NZD, you can take a screenshot. And then from GBP/USD to USD/JPY, you can take another screenshot. And in total, I think it's 25 pairs right there. And that's it. Getting into the strategy. Starting on the weekly time frame. Before I get into it, guys, please subscribe and like, comment, anything, your ideas, thoughts, anything, doesn't matter. I appreciate that. Just comment. All right, so the weekly time frame, what you're gonna look for is what has the weekly time frame been doing. So we can see over here we have a high, over here we have a low, and then we have a high, low, and then we have another high, and another high, low, high, low, high, low, higher, and a potential higher low, because it never closed below this other higher low, so it's not lower. So this is not a shift, so the market is still confirmed as a bullish market on the weekly. So you can see I have a note over here, the weekly is bullish. So let's jump down to the daily time frame. All right, so now we can see the daily time frame. Again, we have a high, have a low, we have a low, we have a high, higher low, higher low, higher low, higher high, and this is equal to this one, so it's considered as a higher low. So here you can see I made a mistake, didn't see this over here, but it's fine. And as you can see, you would think this is a shift, but the market went back up. So the market is currently bullish, so you have to be careful with how the pullbacks are. The pullback, like, it's supposed to be a little bit deep, okay? It doesn't have to be like this one. So it doesn't have to be like this one, but sometimes they can play out, but it's not pullback deeply. So if you wanna use a proper like pullback, just use a Fibonacci and use 50% of the Fibonacci retracement. I mean, yeah, it is simple as that. So we can now confirm that the daily is bullish, and I've written down there on my note it is bullish. So we go down to 4 hour. So once I'm done with 4 hour, there's something I need to tell you. All right, so 4 hour, as you can see, it has been bullish, as you can see from here until the market started pushing lower. Right, this was a shift and it tested the neckline of the M pattern, and then it went down, another retracement, went down and pull back a bit, then the market did this. So this is not a shift until we can then zoom in and check if it closed above this high over here. All right, so I'll try to zoom in more to confirm. Okay, it closed above this one, so I can confirm this is a shift and then a new higher low. Oh, I double clicked. Okay, let me just continue from there. Okay, and then push to the upside, tested EMA, area of interest, psychological level, and then boom, went up. So that's it. Set and forget. So I'm gonna show you where I got my entry and where my take profit was and where my stop loss was. But before we go into that, I promised I want to tell you something, guys. So where's my note? I'm looking for my note. Okay, let's go back to the higher time frame because it seems to be hiding. Here is my note. So 4 hour is bullish, daily is bullish, weekly is bullish. So we have 3 times in sync, 3 time frames in sync. So minimum time frames that you need to be in sync, and I need you to pay attention and listen. Take a pen and a paper and write down what I'm saying. So in these 3 time frames, at least you need 2 time frames to be in sync. It could be that weekly is bullish, daily is bullish, but if 4 hour is not yet bullish, you just have to wait for the market structure to shift into bullish in 4 hour time frame. All right, so it's simple. But now when this changes to the markets becoming bullish on the weekly time frame, and then we have the daily as bearish, 4 hour as bearish, then you have to consider the market as bearish for that time and you have to take sales. And this is because daily and 4 hour would be in sync, and most likely you will see that the market is bearish. And another thing you should consider is how the market is moving. So most of the time, if the market is really bearish, you will see that selling candles will be longer than the bullish candles. All right, so we move on to another scenario. It could be that weekly is bullish, daily is bearish, and then 4 hour is bullish. So this means 4 hour might match the weekly. So once there's a setup, you are allowed to take a trade because 4 hour is just on its own, but at least you have 2 time frames in sync, which is weekly and 4 hour. So our main drive time frame, the main time frame that makes us to take signals, it is the 4-hour. So the only time frame you can wait for it to shift, it is the 4-hour time frame. But if the other two time frames are not in sync with 4-hour, you do not wait for the higher time frame to shift, but instead you wait for 4-hour to shift in order for you to start looking for an entry. All right, now ladies and gentlemen, I've showed you that the markets are bullish on all three time frames. Now let's get into entries. Now when it comes to entries, we're gonna remove at least like 4 days. 4 days. So let's go to Monday. Okay, Sunday, Monday, Sunday, whatever. All right, so if I jump down to, okay, yes, I use the 4-hour to identify my area of interest, and I will show you when did I choose my area of interest. So as you can see over here, I usually wait for the markets to give me a higher high and a higher low in order to look for an area of interest. So I'm gonna remove over here because I can see that the replay button is delaying. Oh, it now responded. That's weird. All right, so that's gonna make it play quickly. Okay, so currently the market on 4-hour is bearish, right? Remember, I am doing a replay, so I know I said it's bullish, but I want you to pay attention. Currently it's bearish, and we will wait for the shift of market structure. So the real shift of market structure was here, right? This is not enough for us to look for entries. So once there is a high that makes a shift, don't jump to start buying. All right, wait for a higher high. So because the high that makes a shift, it is not a higher high, it's just a high, and then this one is a low. So we expect the market to create a higher high, and then the first potential higher low is where we then look for buys. All right, so let's play it and see how it worked out. Here we have a higher high, so now we can then mark the high over here, and then we can mark this as our first higher low. So this allows us to now look for the area of interest. So the area of interest, you look for it between the higher low and the higher high. So if we zoom out, you will see that yes, there are multiple touches in between those levels. So between the higher low and the higher high, you can see this area has multiple touches. And if I can zoom in, I want you to pay attention. I chose areas of rejection, and those rejections, they reverse. Okay, I don't mark the ones that broke through, but I want the ones that rejected, because this signifies that the area level over there is respected. So price is respecting that area as a support and resistance. So you can see over here the market turned and went up. It was a support, broke through and reacted off of here as a resistance, went to the downside, went up again, and then over here acted as resistance. And once we broke that area of resistance, it now then became a support level because price is above. So once price is above, we just want to anticipate a new higher low so that we can be able to buy. So now that 4-hour is bullish and it gave us a new higher high, and a higher low, and we found our area of interest. And over here, this line, it's not just a random line, it is a psychological level. This level is 34,750. So forget about the 34,000, the 34. The first two numbers after the comma is 34, right? So we focus on the last three numbers, all right? Because these numbers are from like thousands, okay? So what do I mean? So I mean like this number is from here. So if we can go here, we have 34,000 as a round number, okay? 34,000 acts as a round number over there, and then 34,500 was a half, okay? So 34,500 was a half, and then 35 is the next round number, okay? So when it comes to psychological levels, there are like three different types. So we have the round numbers, and I will mark now, we have quarter numbers, which is 250. 250 is a quarter of 1,000. Okay, 250 is a quarter of 1,000. Don't know if it marked. So 250 is a quarter of a 250 is a quarter of 1,000. 750 is a quarter of 1,000. Okay, I don't want to waste time on round numbers, but I will make a separate video on round numbers. Okay, let's focus on what we have. So as you know, that this number 34,750 is a quarterly psychological level. So it's a quarter theory number. So yeah, so what we expect is the market to react at least around that level and the EMA and the area of interest. So now that we can see the market is approaching those levels, we jump down to the 1 hour. Okay, now what you have to understand is that 1 hour, it is for entries. This is where now I look for my entries on 1 hour, and I'm wanna see if my there we go, just waiting for it to react. Okay, so here's our note, very important. So now just waiting for the markets to give us a bullish engulfing, if not an evening a morning star, a harami pattern, a doji candlestick pattern, and what's the other one, a pin bar or a hammer, right? So one of those. So I encounter bullish engulfing and bearish engulfing the most as my entries a lot of the times, because that's what the market gives mostly. So let's play it out and see. Wow, so now you can see there's a bullish engulfing over here. So here's a tip: when the bullish engulfing happens, so the bullish engulfing looks like this: a red candle and then a bullish candle that closed above that red candle. So that's a bullish engulfing. So during this hour, you do not take a buy yet. So you have to wait for the next hour in order for you to start buying, because if you buy during that hour, it can happen that this is a false bullish engulfing, because it might not yet be confirmed. So it might reject and go to the downside, and it hits your stop loss. But instead, you should wait to confirm that this is a bullish engulfing. Right, so now that you know, you enter on the next hour, which is the starting of this current candle over here, and set your stop loss below the new higher low. Okay, so I would put it on 30 pips stop loss. So if I have $100, I want to flip the $100, so I would risk 50% of my account. So I would go to my FX book and punch in the pip I wanna use as my stop loss, and the percentage of the amount I wanna use, which is 50%, and it will most likely give me something like maybe 0.30 lot, or yeah, something like that, right? So the risk reward ratio is 1:2. So my plan is to double my account every week. So this is what I do. So now my potential take profit area is where there are multiple touches, which is like this area over here. So I can expect at least the market to go at those levels, maybe. Then I can extend like my risk reward ratio, but I like to keep it simple. Okay, so if I extend 1:2, chances are that I might hold my trades longer than that. And sometimes I don't like holding over the weekend, because sometimes the market can make you hold up to like the next week. So I do not like that. So that's what I do. I keep things simple, just double the account, and that's it. Okay, let's play it out and see. So we got a drawdown, push to the upside. Oh, cheapest missed. Wow, it even got beyond to the take profit that I wanted. I was scared to like extend it, so I didn't take this trade live. I'm just back testing, guys, with you for my first time. I don't know. So this trade happened this week. As you can see, like, I didn't even trade this week. It was not part of my watch list. So my watch list are the ones I marked. This green here was odd CHF, which was bullish, EuroCAD, which was bearish, GBP odd, which was bearish, GBP CHF, which was bearish, and I took a trade here, but I lost because of swap fees, and I will explain to you guys what happened there. So if you had taken 1:3, your take profit over here would have been smashed. And you can see this strategy of, trying to put a zone, zone to zone for your take profit is really effective. And this was a beautiful trade. I wish I saw this setup, but I didn't like how the market was looking like over the weekend. But I'm just learning now as I'm teaching you guys that I should not overlook how it looks like on the higher time frames. I know you're wondering what I'm talking about. I'm talking about how it was looking like. To be honest, this move over here was weird. I thought maybe the market will shoot to the downside, but then the market proved us wrong, and then it went to the upside. So that's why I didn't choose this pair on my watch list. To be honest, I wouldn't have seen this setup at all because it was weird. But this is set and forget. Let's jump to a sell example that I took. Alright guys, this is a sell setup that I took. You're wondering what's happening over here. My take profit was like here. Actually it was 1:3, because I thought the market will like drop, of which it is currently, but I want to explain to you what happened. But let's start with the analysis before we get into why I lost. Okay, first thing first, we want to check. Weekly was bearish. You don't need me to draw for you guys. You can see if I zoom out, it's bearish. Okay, so weekly is bearish, so we jump down to daily. I'm gonna be quick on this one because I already done everything. All right, so you can see on the daily we also bearish. You don't need glasses to see this. All right, so it's bearish. So we were anticipating this lower high to continue going to the downside. Okay, so this was a lower high, this was a lower low, so we were expecting this lower high to push lower. All right, so this is what set and forget is all about. But more than continuation trends, there are counter trend trades, of which I will teach you in the next video. All right, I do have an example of those and I will show you how do we trade them, but they are also risky. But I swear guys, they are fun, because there is a way that there is a technique that I use for you to to be confident in taking those, even though they are risky, and I will show you in my next video. So make sure that you subscribe. All right, so weekly is bearish, we have marked it, and then we jump down to 4-hour time frame. Now 4-hour time frame, already we have a lower high and a lower low, so in between we mark our area of interest. So this was my area of interest, so just trying to mark it for you guys so that you can see. Oh shoot, okay, this is gonna take time. Just wanna finish. This is a reaction, touch 1, another reaction 2, 3, 4, and then the current one. So we had 4 before we entered our sell. So this acted as support until it broke through and became a resistance, and then another resistance, which is now. So selling at resistance levels is good, of course, using the set and forget. Okay, this is not your normal support and resistance strategy. Set and forget, baby. Let's go. So now let me show you how I entered. Okay, so once the market reaches, we're on 4-hour, yes. So once the market reaches this level, so you're wondering why did I enter this sell? Okay, 4-hour has been bearish, even though it did this. There was no shift. It looks bullish, it's not bullish. It's not higher highs, it's not higher lows. It's within the high and the low. The yellow one, the yellow circles over there, this is the last. Let me show you. Yeah, come on. Let me show you guys. This is the last lower high. Okay, before this one, that was the last lower high. So once the market breaks this lower high, we can consider it as a shift. There was no shift, so it's still bearish. So whatever signals that comes, As long as the EMA is above the price, make sure that you sell. Now, let me show you. So market came here, and obviously I waited. I did not sell here. I did not sell here, but I waited, okay? Because I saw this, okay? I saw this, and when the market was approaching the EMA, I saw a head and shoulder opportunity, and that's what made me to enter this position with confidence, because I saw a head and shoulder, and the head and shoulder is now completed, and this is just the neckline, but I hope it will come over here. It doesn't matter if it does or not, but I'm not in the trade, but I hope it goes there, you know, for educational purposes, so that we can see what the market can do. And then if you go to 1 hour, I'll show you how I entered. Okay, so this head and shoulder was top tire, and I waited for a bearish engulfing candlestick pattern, which is this one over here, bullish, bearish. When it closed, I entered. See, I use the same principle every time when it comes to entries. Now you're wondering, why is the EMA below when I entered? It's on 1 hour time frame. As long as 4 hour is below the EMA, then I'm fine. All right, as long as I'm following my rules when it comes to candlestick formation, 4 hour EMA, you know, everything. Look at this, my entry is just below the psychological level. This is crazy. And market went down, and as you can see on my screenshots, I did double the account, but the reason why I didn't close as soon as it doubled, you're asking myself, yes, you use 1:2, what happened? Yes, I went full port on the $100, and when it doubled my account, this trade was not on 1:2, hence you can see my stop loss. My stop loss was 30 pips, and when market came here, when my account was doubled, it was not 1:2, but 1:2 was around here. So if it was like 1:2, I could have been $300 in balance and $200 profit, but I was aiming for 1:3 because I believe the market will break lower there, and I would have been in profit right now. But the broker that I was using, I didn't know when it comes to pairs like this, it charges like a lot when it comes to swap fees, because I held this position from Monday, and in total from Monday to Thursday, they charged me $40, and per day they were charging me like around $8. But I went to ChatGPT to ask about swap fees, and I saw it said on Wednesdays swap fees they charge like a double, they charge more. So I don't know why, but ChatGPT said they charge more depending on broker. So it seems like they double charged me on Wednesday, and then Wednesday evening jumping to Thursday, the swap fee was total of $40, and the spreads stopped me out, plus my swap fee didn't allow my trade to stay in. So if it was a swap free broker, I would have been okay. But remember, I also went full port, but the swap fee it's a big no for me, so I'm changing the broker. So yeah, that is set and forget. Guys, don't forget to like, share, comment, and subscribe, and please stick to this strategy. It is the best. You will see profits, I promise you. Cheers.